How are you doing, guys? Welcome to my YouTube channel. My name is Zeda Forex, and today we are going to learn about supply and demand zone. Before we learn, make sure you subscribe to my YouTube channel, like, share, and comment so that I can know who is watching. And today, what we cover what is supply and demand zone. What is supply and demand zone? We'll cover that. Then we'll cover characteristic of supply and demand zone. How do they look? And then how to mark them. How do we mark supply and demand zone? How do we mark them? Then the relationship within wicks and imbalance. How do they relate wicks and imbalance of the candle and how to trade them? So make sure you be keen and attentive in this class before we start. Without wasting much time, let us start. What is a supply zone? A supply zone is an area on a chart where selling pressure is higher than the buying pressure. What do you mean by selling pressure is higher than the buying pressure? So guys, what is a selling pressure? A selling pressure refers to a situation where there is an increased amount of selling activity for a particular currency, leading to a decrease in its value relative to other currencies. For example, when you look at here there was a buying activity around this zone. There was buying activity, which then all of a sudden there was a big selling pressure. This is the selling pressure. This big candle. Okay, guys. And what is a demand zone? A demand zone shows where buying pressure overcomes selling pressure, pushing prices higher. A demand zone is the opposite of a supply zone. So let me show you what a buying pressure is. Guys, this is the buying pressure, a picture of the buying pressure. So you want to know what is a buying pressure. A buying pressure in the forex market refers to the situation where there is a significant demand to purchase a particular currency. Here, the sellers were in the market. Then all of a sudden, buyers came in and pushed the price higher, which means around here, there was a big buying pressure. So guys, let us look at the characteristic of supply and demand zones. In supply, it is formed during an uptrend, and in demand zone, it is formed during a downtrend. That's the difference. Supply zone, price rejection with a long bearish candle. In demand zone, there is a price rejection with a long bullish candle. In supply zone, there is increase in trading volume, same to demand zone. That's all we need to know about the characteristic of supply and demand zones. So guys, let's say the price was on a bullish move from here to here. It created a new higher high, higher low, higher high, and then all of a sudden the higher low was grabbed. So this is how to draw a supply zone. A supply zone. We said a supply zone must have a rejection, which is this one around here, a bullish candle, giving a rejection. So guys, the price came from here. We were on a bullish move. The price came from here up to here, getting a new high, then a new low around here, then a new high. Here, after price breaking this high, this zone is called a break of structure. Let me write it, break of structure. Then price continued going up. Then all of a sudden, price came down, grabbing this low. And when a price grabs the last low, it is called a change of character. Let me write it in short form. Change of character. So now we are participating a sell. I said if you see a selling pressure, a candle which has a selling pressure like this one, it has a selling pressure, a big selling pressure. We want to look for sales. We want to look for sales. And where do we look for sales? In a supply zone. And now we want to draw a supply zone. So this was the last bullish candle. In a supply zone, we draw the last bullish candle, which is this one. And it has a nice rejection it has a break of structure, and you have seen a change of character. If you have those three things and add a fair value gap, it is a space between three consecutive candles, 1, 2, and 3. There's a space around here. It is a fair value gap. So how do we mark a supply zone? We take our rectangle, we mark this first bullish candle like that. Okay, so what we're expecting price to come around this area of a supply zone. This one is our supply zone. The area that we marked is our new supply zone. We expect price to come this area, then we open our sales position to grab the next low. That's how we draw a supply zone. Let's look how to draw a demand zone. And this is our zone. So the price was on a downtrend. The price was selling. It created a lower low, lower high, and a new lower low, which created a break of structure. This is a break of structure. Then after that, there was a rejection around here before the price giving us a big candle, which means that the buyers are in control. This big candle momentum showing us there is a big buying pressure. So the price went up and grabbed the last lower high, which created a change of character. So after we observe a change of character, either in a lower time frame like 5 minutes, 15 minutes, we now look at a swing low, which is this one, the last candle, the last bearish candle, which is this one. What we do, we want to look if there is any imbalance around it, near it. Okay, we now see imbalance around here, this zone. This one is an imbalance. And then we look at the last bearish candle, which is this one. So we mark this one as our demand zone. As simple as that. We mark the body and the wick. Then we name it a demand zone. Demand zone. So guys, that's how we draw the demand zone. So guys, let's try backtesting this our supply and demand zone. So here we have AUD USD on a 1 hour time frame, and price is making a very good higher high, higher lows, higher high, higher lows, then higher high, higher lows. What we wanna do, we wanna wait for a change of character. These are break of structures. Let me delete this. Here, a break of structure. Yeah. Then we have higher high, new higher low. Then we break this high. We have another break of structure. Our low. Then let's see how the price will go. We want to see a change of character before taking any sell trade. The price continue to push higher because over here we have a new high, then a low. So this one was our last low. We want to wait for a change of character. Let's continue and see. Boom. The price has broken this low, which means that this area is we have a change of character. So what we want to do, we want to mark the last high, the last candle high, this one. So we mark this last candle. So what we do, we mark this bearish candle, and we name it supply zone. This is where we're gonna sell the market up to grab this, the next low. So we take our tool, short position, we wait for price to come here, then we target this next low. Stop loss above that high. Let's see how price will behave. So you can see price has come to this supply zone. I touch the zone, then starts to move downwards. What our target? We are targeting this low. Let's see how it will goes. Boom. That's the first example. Let us look another example. So guys, I was looking at this British pound and US dollar, and we were on our uptrend, getting higher highs, higher lows, higher highs, higher lows. Then we have a new high here, then a low here, then a new high, then this low is grabbed, meaning we have a change of character around this area. So what you wanna do, for me, if I usually see a very big candle, which I cannot draw, I usually drop to lower time frame, like 15 minutes time frame. So let's go to 15 minutes time frame. 15 minutes time frame. 15 minutes time frame. The candle which I will use this one, the small one. Leave alone this one. I mark this one as a supply zone. Remember, supply zone is an area where we sell. You also have imbalance around this area. There's imbalance around this area, which give us a good confirmation. Stop loss we put above this high. So let's patiently wait for the price to come around this area. Short position around this area. I only need 1:2 or 1:3. 1:2 is around there. Let's see how the price will behave. Let's go back to 1 hour so that we can have a better view. 1 hour. Let me extend. It finally touches our zone. And you want to target this low. Short position around this area. Stop loss above here. Then I'll take profit to the next low. Let's see how it goes. So guys, the price has finally reached our zone. Let me now give an example of a demand zone with an example in the chart. So guys, we want to find a demand zone. And this is gold spot. So gold was moving in a downward trend, creating higher lows, higher high, higher lows, higher high. Then we have, this was the last low. So what you wanna do to confirm if buyers are in control in the market, we mark that the last higher high, which is this one. This one was the last higher high. And what we wanna do, I want to see price come above here, grab this high. After price has grabbed this high, we can now confirm that this is our demand zone. Another way of marking a demand zone, I usually mark wicks if the body is too big, or I drop to lower time frame like 15 minutes, 30 minutes, or 5 minutes. So I will mark these wicks after the price breaks this high. Let's see how the price will play. Yeah, the price grabs this high, which means we have a new change of character. Remember, this one was the last low. Don't confuse. This one was the last low. In order to catch a buy, we mark this zone. Let me take a line. I mark this week, the lows this week, and this week. And I want to wait for price to come around this zone. Then we buy, we grab this next high. Now let's see how the price will play. It usually takes patience and a lot of time for price to reach your zone. Yes, we can now finally see that price has come to our zone, our demand zone. So this is our demand zone. What is our target? Our target is the next high, this high, this high. That's our target on gold. So what we do, we mark this area as our demand zone. I usually love doing this. I love doing this. I name it a demand zone. Demand zone. I want to target this high, stop loss to this low. Long position. I want to see price reach to this high. So let's see. Then finally, it took out our zone. So this is another way of marking a demand zone. Yeah, that's all, guys. And now, finally, guys, before I leave, make sure you subscribe to my YouTube channel because this is a new channel and we're posting videos frequently. And if you have not understood, I will be repeating this with good examples every day. And let me give you a tip how to trade supply and demand zone.
Mm-hmm.
Before you trade, number one, you need to confirm your entry. Once a supply and a demand are identified, you need a confirmation. A confirmation can either be imbalance, rejection, or a candlestick pattern. Example, bullish engulfing and piercing lines. B, you also need a chart patterns like head and shoulders, double tops, or anyone. Also, you need a momentum indicators, which you can get them free on TradingView. And if you want to exit, don't exit on emotions. Don't exit on emotions. Be real. Be true to a setup. Believe in yourself. Be true to a setup. Always close 50% if you see the price has reached to a position where you wanted it to reach. Okay, guys? And a clue, always use a trailing stop loss. Trailing stop loss is moving your stop loss to break even. Example, if your stop loss was around here down, and your price is around here, what you want to do, you want to move the stop loss above to somewhere like here, this low, and wait patiently for price to reach around this zone. I'll be teaching that in the next topic. So also remember risk management. Use stop loss wisely and I'll be seeing you in the next video. Make sure you like, subscribe, and share. Goodbye, guys.